Under the program, government will be slashing interest on bonds for 2023 and then spreading interest payment over the next 15 years. It is the first time since the 1972 commercial loan default that the country has unilaterally announced a debt default. Key in the debt exchange program is the suspension of interest payment for institutional bondholders. The minister maintained that individuals will be exempted from the planned debt exchange program.
The combination of adverse external shocks have exposed Ghana to a surge in inflation, a large exchange rate depreciation, and stress on the financing of the budget, which taken together have put our public debt on an unsustainable path. To address the ongoing economic crisis, the government has requested financial support from the International Monetary Fund. We expect to reach a staff-level agreement soon on an IMF program aimed at restoring macroeconomic stability and protecting the most vulnerable. To this end, as a government, we are determined to implement wide-ranging structural and fiscal reforms to restore fiscal and debt sustainability and support growth.
Meanwhile, Chief Economics Officer and Director of Treasury and Debt Management Division at the Finance Ministry, Samuel Dankwa Arkest, clarified who will be regarded as an individual under the program.
The individual in this case is a natural person. All of us sitting here are individuals, so we are natural. I can see you, you can see me, you can talk, we can talk. So you're natural. And if you're registered in the CSD, so in the list that you have, the CSD has registry of everybody who has invested in government instruments. So if it's an individual, it is tagged as such. So it's easy to identify who an individual is.
Among other policies, government plans to reduce its public debt stock to 55% and is currently working with the World Bank to review its flagship programs. Ken Ofori-Atta is hopeful these measures will put the economy back to recovery.
We accordingly anticipate that inflation will be returned to single digits, ensuring that real return on these new bonds will be protected. As His Excellency the President declared in his address to the nation on 30th August, 30th October 2020, and I quote, "To restore and sustain debt sustainability, we plan to reduce our total public debt to GDP ratio to some 55% in present value terms by 2028. This debt exchange provides an orderly way to put our economy back on track."
Mr. Ofori-Atta hinted that government will be turning their attention on external debts once the domestic program kicks in.
The announcement by Finance Minister Ken Ofori-Atta has been expected by investors and analysts for some time now. It finally came and detailed government's plan, but the minority are not happy with the measures government has announced.
Today, Ghana has officially announced default of its external debt. That is what it means. Unfortunately, this will mean that by close of this week, rating agencies would downgrade Ghana further to D. That is where we are. Ghana will be the first country in the entire Africa ever to restructure its domestic debt. I want to say that government statement that the haircut is there will be no haircut is a hoax. I've just done a quick back of the envelope calculation. Says clearly that the Dachi bond, for instance, if they exchange the Dachi bond, the terms and conditions of Dachi bond to a new terms as announced by the minister, any person who holds the Dachi bond is going to lose 63% of its investment in present value terms. So the haircut is steep, and that is what I call backbow. It is very steep, and it is going to erode your hair completely. A black will be better off. So,
Minority Leader Haruna Idrisu says this arrangement is unacceptable, and the minority will be resisting these plans.
Let me state without any fear of contradiction that the form and structure of the debt restructuring plan announced by Minister Ken Ofori-Atta is unacceptable to us, and we simply will not accept it.
Meanwhile, there's set to be a repeat of the scenes in Parliament last year when government introduced the unpopular e-levy. The minority are now vowing to resist the 2.5% increase in VAT rate.
What moral right has Nana Addo Dankwa and the MPP to increase VAT? In 1995, when the NDC sought to introduce this tax, they organized what was referred to as Kumipreku, resulting in loss of life of 5 persons. Where is principle? We will not support any 2.5% VAT increase as a group. Whatever will be accumulated from that 2.5%, they can achieve same through expenditure cuts.
Haircut or no haircut, this debate will continue for the many months as government engages with investors and the international community in what will be some painful negotiations. This debt restructuring forms part of government's efforts to get a bailout from the International Monetary Fund to fix the current economy, which is facing some severe challenges. And now Ghanaians are beginning to realize that the current economic challenges may drag on for some time, as some watchers predict this will stay on for some decades to come, at least a decade. For Joy News, Kweku Asante, Parliament House, Accra.
Well, and that is what transpired yesterday as the finance minister, together with some others from the finance ministry, shared their thoughts with us about this debt exchange program. Before we get into further details, I also have joining me here for the conversation, Bernice Abubedu at Lanza. Good morning, Bernice.
Good morning to you, Benjamin. How are you doing?
It's a Tuesday morning. It's been quite a morning. Mm-hmm. I was just sharing with our producer, Derek Ekosam, some happenings of this morning. But life is what it is, and things happen all the
life
time.
Moves on, yes. But yesterday we were here when we crossed over to the Ministry of Information to hear what was termed as our debt exchange program, which is supposed to help us get out of the woods when it comes to our economy. We've heard the minority on this. It's now time to bring in some expert analysis to break it down a bit. The finance minister was very specific about those who will be affected. He stressed no individual bondholder will be affected. And he needed to create that emphasis because there was a lot of talk and conversation about those who will be affected by what we had referred to as haircuts. So yes, this morning we're here to break it down, help you understand what the years ahead will look like. It's
all the way till 2037.
It's instructive that we brace ourselves because, like Kweku Asante, in wrapping up his report from Parliament, to say some experts say this will take us at least a decade. So, Benjamin, we need to understand what it will look like for us going into the
So 2022, at least a decade, you're looking at 2032. Of course, some of what we're doing now will extend into 2037. That's 15 years from now. What will all of this mean for us moving forward? Well, so questions like, what is the debt exchange program and what does it have in store are on our minds? We're joined by Professor John Gachi, who is Dean of the University of Cape Coast School of Business. We also have Professor Lord Mensah, lecturer at the University of Ghana Business School. Charles Appiah is Executive Secretary with the Ashanti Business Owners Association. All of them join us as of now for this conversation. Prof and Mr. Appiah, a very good morning to you. Thank you for joining the conversation. So to all of you, I just want to check your mics because I'll be taking you, if you could unmute. A very good morning to you, gentlemen. Okay, at least I can confirm that I can hear all of you. We'll start the conversation off with what this entire debt exchange program means and how, well, I think the how of getting here is clear now. We are in dire straits. We're on the ropes. But what does it really mean for us as a people to engage in a debt exchange program based on what you heard yesterday? I'll start with you, Professor Lord Mensah.
Yeah, I mean, thank you very much, and good morning to my viewers, and good morning to my colleagues out there. You know, debt restructuring, in simple terms, let me put it to say that government wants to reduce debt burdens on its, balance sheet. Let me put it in simple terms. Of course, when a country is in distress, when it comes to debt, obviously, the country may have to find a way to restructure that debt. The name given to it, which is debt exchange, or we call it debt restructuring, or it could be reduction in, interest rates that investors are expected. Whichever way you look at it, it's still, debt restructuring. But effectively, you see, the government went into contract with creditors, and the creditors had expectations. And the expectation, if I should break it down, you went into an investment, and the investment contract says that you're going to enjoy possibly 25% per year. Now, government says, okay, fine, I borrowed your funds, but then looking at the situation, the economy, and then things that are happening, it will be difficult to pay you. So if I'm paying you 25 per year, then possibly I will have several means of softening things for you. Other than that, I may go to ground zero, and in the end, you will not get your money at all. So usually, when a country is about to default, there's a room for that debt restructuring where creditors, instead of waiting for default to take place, not to get anything at all, they will be better to have their money, but possibly the money will not come as expected. So effectively, there is an exposure. So the creditor's expectation will not be met, because if you are asked to, the contract says, or the bond agreement says you have 25%, you're not going to get a 25% anymore. Even if you get a 25%, it can be spread over a certain period of time. So in the end, if your contract says you have, 4 years bond that you are holding, it could be prolonged to 8 years, for which, the interest or the cumulative interest that you're supposed to enjoy within the 4 years can be spread within over the 8 years. So in the end, if it's 20%, it will be spread maybe 10% over the years. So at the end of the day, your expectations that you could have gotten 25%, 20% a year, it won't come. So debt restructuring usually happens when, government is about to, not government alone, corporate entities or any borrower is about to default. And in that case, but then before this, debt restructuring, you remember, debt is a contract that you go into with, creditors. And in order to keep the confidence of creditors on hand, because, you see, the whole financial space is about trust. And if you do anything to derail the trust that the investor community have in the system, you may end up, destroying the economy completely. Now, ultimately, government wants to achieve a target. And what is that target? The target is to reduce your debt on your, balance sheet. The reduction of debt is a benefit to this exercise. You may have to ask yourself, what is the cost? If you don't take care, and the cost that you create after the exercise as a result of, investors losing trust in your economy, there will be a dire consequence as a result of this exercise.
Right.
So in simple terms, let me put it that way, it's an exercise that government wants to use to reduce debt burdens, possibly defer some debt burdens, let me put it that way. So that is my simple explanation, before we take off.
All right. Prof, your understanding of same. I just want to start off the conversation with each of you giving your take on this before we get into the main issues. Professor Gachi?
Okay, thank you very much.
So briefly on that, so it's just a precedent so we can build from there, please.
As my colleague just said, when a debt holder is about to default, the key thing is that he talks with the creditors to explain his position to them, the inability to repay because of the burden of debt, especially the interest. So he put forth something on the table to discuss, and they agree on. And when they agree on it, perhaps it's announced. But in the case of Ghana, perhaps Parliament will have to approve the agreement, and then they move on. But if you come to a point where it is coming from one side, that becomes difficult. So I believe the aspect that I want to add is the negotiating aspect, that when that negotiation is concluded, it's amicably resolved, because it's a contract that you have entered into to pay accumulated interest and principal at maturity. So if you are not able to do that, the best thing is to enter into some negotiation and agree upon.
Okay. For you, Charles, like we see in the Daily Graphic today, and as has been explained to us, it simply means that government is going to allow, it's a voluntary exercise, government is going to allow institutions that hold bonds issued locally in Ghana to postpone payments on investments or returns on investments to later dates. For you, the business community, the Business Owners Association in Ashanti, what does this mean to you? We've heard from some tiers 2 and 3 companies telling us, reaching out to customers. Some of the banks have started reaching out to customers as well. What does it mean to you?
All right. Good morning once again. Just like the two speakers put it right, at a certain point when you can see or you foresee you are not able to meet your debt obligations, it is appropriate to engage either your creditors to arrange what we call the moratorium payment, so at least to give you that kind of credibility, and also to freeze or to give you some space that you can as well borrow. In debt service ratio, when you reach a certain percentage, you become not creditworthy for any financial institution to advance a facility to you. And for government to look good in the eyes of investors, I think it's appropriate for him to engage. My concern is about the timing. This engagement probably could have been done earlier, because there's economic ramification in looking at domestic debt exchange. A typical example where most of the financial institutions and security vehicles sit with government. And they have advanced these funds to government in anticipation of a certain returns. And these deposits are not from the bank itself, majority is from customers. So if I have advanced a certain investment to government with an expectation of a certain cash inflows, and that is it, the tendency of me as a bank not meeting requests from customers in terms of deposit record will create a lot of problems. So from the community where the business people are, we're looking at, is our money saved? Anytime we want to call for our monies, will it be made available to us? That's the red flags we are raising. So we have a proposition that government should not.
Oh, unfortunate. It seems the connection to Charles is a bit... Charles, can you hear me? It appears it's not too good.
We'll try and rework the lines. Hello, Mr.
I think he's back now.
Yes, I can see you. Yeah, that's fine now.
Right. We lost you.
Oh, sorry. Is it okay now?
Yes, much better. So we just lost you at the point where you were telling us what your proposal is and how you hope to receive your monies when you go to withdraw them.
What we're proposing is very basic. Government should not only look at debt restructuring, but must also be looking at how he can create fiscal discipline to reduce his expenditure. When you have borrowed money and you are not able to pay, you must reassess your lifestyle and see how best you can reduce your expenditure, so you can also create space for the investor to get some money to plunge back into his business to reactivate economic activities. So our concern basically is about government reassessing the situation and see how best I can also cut down some of my discretionary expenditures to create fiscal discipline within the space.
Right.
So we don't only the business people, but you as government must also show leadership in showing that we are in this together. And that will give everyone that comfort that, oh, it is not only me that I'm suffering, but government has shown some steps that is also reducing expenditure. But as it sits now, we have not seen that kind of leadership and that kind of steps from government to reduce its expenditure to meet the changes and the challenges within the business environment.
Right. All right. So let me come to you again, Professor Gachi. Ben is here. You're reported by the Ghanaian Times as saying that this appears to be an imposition or by the government. We've heard from organized labor. It's concerned that government didn't negotiate. There were no talks with those who will be directly involved, and the impact will hit hardest. While this is happening, on the other hand, during his speech yesterday, the finance minister was courting the support of the public in ensuring that this debt exchange program becomes successful. How exactly will individuals be involved in ensuring the success of this program? And what happens if the worst happens and government is not successful in running the program?
Well, I think you have provided answers to the question already. You heard a number of people claiming that they have not been consulted, no negotiating took place with them. So that is the basis of that statement. And of course, the regulators are for government, and therefore they will press on what the government wants. So it doesn't look like it's a voluntary, as said. So I think I just spoke about the quality of the negotiation, which was not done.
Right.
And that is a way by which you can do this. In fact, what would have been the situation if key creditors come together with government and provide a press release as done yesterday to indicate that they have understood the situation, they are willing to sacrifice some level of interest and some level of principle, and that they have agreed on this together. I believe we will not be here discussing this. So I think that is the point I have made.
Right, but Prof, my question was, government is saying that it expects overwhelming support for this program. How would we give that support as a people? And what happens if this program is not run successfully?
Well, I think much more engagement will have to be deepened. We have to throw away all kind of cloud that we have, go down to the people, speak with them, explain the issue to them correctly, and appeal to them. While at that, I believe some statements are not correct when you match that with what we know in finance. For example, you cannot say that the value of the bond will be the same at a future date when you have changed the terms. That is not correct. You cannot say that nobody is losing anything after changing the terms of the bond. So that will have to be explained to the people, because we have come to a crossroad. The borrower is not able to pay. That is why he's calling for this debt restructuring. And that should be communicated down to the people, and the people will understand, and then we'll move on.
Right. Professor Lord Mensah, in practical terms, how do we give the support that government is asking for? Is it just by merely saying, okay, we support you, or we need to take certain steps to show that support for the program to be successful?
Okay, so before I come to your question, you see, government took the contract that's involved, you know, when it comes to bond engagement for granted. We need to understand that finance, law, and economics goes hand in hand. The law is there to put in some trust in the financial space. If you take the engagement, you see, the financial relations, that goes with, you know, the kind of statement that the finance minister made. We may take it, you know, on the surface, looking at possibly we say, okay, fine, institutions are invested, individuals are invested. So therefore, you know, institutions are going to suffer or this kind of, you know, debt exchange, whilst individuals are not going to suffer that exchange. But we need to clearly look at, you know, how many individuals are investing directly into government bonds. How many individuals have central security depository number to invest directly themselves? Most of us are investing indirectly. We invest indirectly through pensions. We invest indirectly through, you know, mutual funds. We invest indirectly through, you know, insurance. So effectively, through banks as well. So effectively, the entire financial space is dominated by institutions, which transcend to individuals who have sent their money to the individuals.
Right.
So before, you know, such an engagement, I'm coming to your question.
Right.
Before such an engagement, there should have been an engagement to revert most of and bonds agreement or bonds investment in this country, so that at least when you trigger this restructuring and you revert those laws in Parliament, which is a representative of the people. So at the end of the day, when it goes through Parliament and you do your groundwork to engage individuals one way or the other, it turns out to be more or less, you know, getting the buy-in of the people. But you don't make the announcement before you indicate, you know, the buy-in of the people. No, you need to respect the contract that the people had with you as a borrower. That's in this case the government. If you respect the contract, and let me tell you one thing: if you want to keep, you know, the serenity of the financial space, if you want to keep people's trust, it's about respecting the contract you have with creditors. The creditors provided their funds in anticipation of a certain levels of interest rate. Now these interest rates are going to be changed, which will derail, you know, their expectations. What do? The laws that were binding as a result of, you know, that earlier engagement, you need to revert the laws, change it to suit your new agenda. Because as a borrower, you know, these days, we cannot say even government instruments are risk-free anymore. And of course, I mean, those indicators that were given in the textbooks in practical sense may not be like that anymore. We know sovereign entities have been, you know, defaulting over the years. But Ghana, this is the first time that we are seeing this restructuring, right? And so it must be done well, so that we don't lose trust, you know, that the people have in the financial space. Over the years, you barely see people developing interest in, you know, investing in T-bills, investing. People were putting their monies in things that they can control.
All right, Prof. So to my question, how do we practically get involved in this debt restructuring program? Government is courting the support of...
It's the borrower that needs to initiate. that kind of engagement.
By?
It's not, you, the creditor, or the individual, or the pension, contributor that is supposed to do this. The borrower needs to take initiative to ensure that they meet the people. And I gave you the answer. The answer is through Parliament. That's why I said, before the contract of bond that will come between creditor and the borrower. In this case, the creditor are the people who are investing through institutions,
right,
who are being represented by parliamentarians. Right. So you go to Parliament and seek their buying.
Okay. Finally, on this, in his speech yesterday as well, the minister cited two countries. He spoke about Jamaica and he spoke about Greece. But when he spoke about Greece, he mentioned that Greece had to almost as if forcefully implement its debt exchange program by enforcing the law. And he mentioned that they didn't want to do it that way. And so this is voluntary. So what happens if debt holders or bond holders do not trade their existing bonds for the new one?
Of course, we need this, debt exchange. If we don't get this debt exchange, government is likely to default on some of these, instruments that people are holding. If government default, the economy, as a result of raising funds from one way or the other in the domestic market, is going to be grounded. People will not trust the government anymore. So we need this restructuring. We need the buy-in of Ghanaians and potential creditors to have this done. But then, if you want to do it, like I said earlier, ensure that the people are part of the process.
Right.
In terms of ensuring that people are part of the process, well, how much of a part of the process do you feel, Charles, on the back of all of these business owners? Basically, this is being shoved down the throats of the business community and investors, so to speak. And we've been told, for example, and this is something I'll run by all of you, but for you, Charles, when you look at the menu per what the finance minister told us, and in terms of the current bonds, so you would notice that between now and 2037, the plan is for 100 units of old bonds in face value, for which the holder will receive new bonds in the following proportions: 17 units maturing in 2027, another 17 units of intermediate bonds maturing in 2029, 25 units maturing in 2032, and paid in 3 equal annual installments. There are some semi-annual installments, and then 41 units of long-term bonds maturing in 2037. For you, those in the business community, especially in Ashanti, what does that imply? Do you have some of your members investing into these bonds, and what are the expectations on this matter?
Yes, thank you once again. Obviously, every business man or woman will obviously want to have some kind of diversification in terms of its business portfolio. So it's obvious we might be holding some of these bonds with government. As earlier indicated, we did that in anticipation of a certain returns. But this event, it means that those expectations will not be met. And that obviously will also affect our cash inflows. You also will avert your mind to events that has happened over the period from January to this time, where our working capital has been depleted. Probably our safe havens would have been relying on these returns from these bonds to support our working capital. So a short supply of these obviously going to have some negative implication on the capitals that we have to use to operate. And as indicated, when circulation of these revenues is seized because of debt exchange, it have some diverse consequences on business environment, which obviously will affect the economy. Government is expected to raise certain revenue to make his budget running. With this introduction of debt exchange, how is a businessman going to run his business to raise enough revenue for government to tax him? So this obviously is going to affect government revenue targets within the business community next year. So it's not a blissful environment. We are only anticipating probably we'll be saved by omens, but as we sit and we look at projections and how events are unfolding, the environment is not friendly for business communities, especially in Ashanti region.
For you, Professor Gachi, so we've heard from the Ministry of Finance in terms of the fact that individuals are not part of this scheme. It is those consolidated outfits that are part of it. But what happens if by the 23rd of the month, an entity does not participate in the exchange, especially in light of what we know now, that the Chamber of Corporate Trustees has rejected government's debt exchange program. It is dated yesterday, and they have a statement out which they reference. And for example, they say the pensions chamber would like to assure contributors to pension schemes that the industry has not agreed to the debt exchange program proposed by the Ministry of Finance. That throws a spanner in the works, right?
Well, that is a blow to the minister. So that is the reason why we said there should be proper engagement before an announcement. And to be frank with you, I don't see this thing to be voluntary.
Okay.
All the regulators are in the arms of government. They have been empowered. They have been doing this work since July 2022. They have collected data. They know where government investment, the portfolio of the fund managers have been skewed towards the government. So they have been in this case already. Securities and Exchange Commission has triggered some provisions in the law to deal with this matter one way or the other. So I do not think it is a voluntary matter. Of course, individuals and the groups have the right not to participate. But I believe if the minister wants to achieve the objective of the debt restructuring, then these are the people that should be targeted to talk to negotiate with, to come to terms with the reality.
So those are the people to negotiate with. What if these people reject, like we're seeing the Chamber of Corporate Trustees, the CCT, reject the offer now? If this offer rejection persists, what then happens? What are the options for government?
Well, I think if they reject, it is well in their rights. It's an obligation. It's an agreement. So if they don't agree, they are right. But as I said, the government and the people involved in all this scheme should continue to have engagement with these people and to let them appreciate the situation in which they are. They are near default. Right. They don't have money to pay. And so those are the things that should be pressed on. Of course, the people are going to lose money at the end of the day. They should be bold to let these things known to the people and appeal to them.
For you, Professor Lord Mensah, so when you look at the statement as put out by the Chamber of Corporate Trustees, they say, we have carefully analyzed the announcement by the Minister of Finance. So it wasn't a knee-jerk reaction on the debt exchange program, and are of the opinion that it is injurious, I'm playing on their words, to the interest of contributors to pension schemes. As trustees, we hold a fiduciary responsibility and are enjoined to seek the best interest of contributors at all times. We encourage all contributors to pension schemes to seek further information from their pension providers or administrators as we engage further with government for an improvement to the terms of the restructuring. That brings me to my question. What sort of improvements could be brought to this sort of transaction as proposed by the Finance Ministry, Professor Mensah, to make it accommodate some of the interests of the Chamber of Trustees as far as this debt exchange is concerned? What are some of the things government could look at?
Right. If you listen to the Finance Minister's statement very well, clearly you could see that the terms are in such a way that, you know, the bonds that is going to be exchanged for, those bonds are fully backloaded. And if I say fully backloaded, it's in a sense that for the first, few years, you will not realize much on your coupons. And that is what probably these pension institutions are interested in. You know, if you say the whole of 2023, I'm not going to get anything on, on a bond investment, then obviously that is zero interest. Probably the pension fund may have certain obligations that must be met within that, 2023. The next year you said is going to be 5%, and you move on to 10% level for the rest of the bonds tenure. Now, what this tells you is that the front loadings, that is the coupons that these investors are supposed to enjoy for the next, 2 years, are very low. So probably, if they are rejecting the terms, then they may want the finance minister to restructure in such a way that if next year they may get something, the following year, get maybe more than the 5%, and then the levels that it will be played, possibly look at, taking the 10% to 15%, and then reducing, the time period from the 2037 to maybe lower number of years. So effectively, these are the things probably negotiations can play on. But the question is this, structures or new exchange format of bond coming from the finance minister? I don't think it's coming from the finance minister. It is coming from IMF. So the finance minister must make sure that Ghanaians get a buy-in into this. But from the fund, this is possibly a way to go so that we can get a deal with the fund. Because if you listen to the finance minister very well from his introduction, this restructuring is triggered as a result of having a staff level agreement with the fund. So effectively, the finance minister may not own this kind of exchange, but then it is IMF that is passing on through him so that he will communicate it to the creditors. Other than that, the best way, if the finance minister should own it, he can what? Change the terms in there to suit what the pensioners need. And like I said, it is too backloaded. That means that the enjoyment in the restructuring will come later in the years. But then they can find a way to ensure that they bring some tease of enjoyment, at the front of the earlier years, so that the pension contributors and investors will be comfortable.
I have a quick follow-up on just that point about the years ahead, because many people are concerned about that. But let me just say that we've been joined by Dr. Prince Kofi Klugerson. He's a former AGI president. Welcome. And we'll be also taking his thoughts on this conversation we are having. But back to you, Professor Lord Mensah. We've been told to brace ourselves for 15 years. There are those who say that, look, the times are not going to get any better. This is basically because of the maturing or maturity dates. Now, does this necessarily indicate that we are going to have 10 or 15 years of what we're seeing now, or we would see a gradual ease on the suffering of Ghanaians?
Yeah, having come to this level where government has indicated, a possible restructuring, and then also process of, engaging IMF to go for a rescue, I can say that we find ourselves in the bottom part of the dip. And I can say if the government should succeed in, getting this restructuring to go through, and then together with, an IMF deal, we should see, that kind of comfort in the next, 2 to 3 years. Because if government should get this, debt restructuring through, the government is going to have that fiscal space And I'm praying that that fiscal space will be used wisely, because if it turns out to be a fiscal space that will be abused or possibly turn around to, borrow further from other sources, then possibly we may not enjoy the benefit of this exercise. But I'm hoping that after we've gotten through this, process of debt restructuring and all those, to ease up, that kind of pressure on interest payment as far as government obligations are concerned, and then together with IMF's presence. And remember, anytime we find ourselves with IMF, there seems to be that kind of financial discipline that a country enjoys. And if it continues, obviously, we're going to come out from the situation we find ourselves in. So probably we find ourselves at the bottom part of the hard times, and the next level of, economic dynamics will be seeing some kind of, sunshine.
Right. Mr. Klugerson, welcome once again, Doc. So your initial thoughts on the announcement and the details shared by the finance minister yesterday?
Yeah, thank you very much. It's problematic, I can tell you. From my experience in the past, dealing with most of these issues and leading to law. See, the question really is whether or not it's the minister's decision. It's a very, very big pragmatic question, or whether or not it's the Ministry of Finance decision, or as Professor Lord is saying, whether it's the IMF. Now, if it's the IMF, then it means that we all need to re-engage ASAP. Because we're talking about all the politics, all the issues. See, the problem I have, whether or not the Minister of Finance has a mandate, which his own mandate expires on the January 7th, 2025. So what happens thereafter? You see, we had a major meeting, AGI Congress the other day, and then government statistician brought a lot of data, and most of our AGI members started worrying about these bonds, the swap, and what have you. So for me, I don't want to be negative. I want to be proactive as to what is it. Assuming the IMF did not give us the money, what happens? The whole of yesterday, today, we'll be calling ourselves together, those who understand some of these issues. You see, this thing, if I understand what is going on, is we are getting near bankruptcy declaration.
We're getting near bankruptcy declaration. Right.
Because you see, if it's IMF, then they are implementing what they call in the US Chapter 7, Chapter 11, and Chapter 13, bankruptcy laws. And I believe we had a Chapter 11 environment which allow us to reorganize and what have you. If that's the case, if something slipped and Ghana goes bankrupt, we're in a very serious trouble. Right. Number two, whether or not the $3 billion everybody is talking about, what is it for? There's a need to be able to do an audit.
We're told it's for interest payments.
Whatever.
Balance of interest.
If it's for interest payment, doesn't favor Joy FM staff, who are going on pension in SDN. See, what do we do? I believe that we can solve this problem if we know what the problem is. You see, look, we've done HIPIC, we've done structural adjustment program, we've done many, many things. And I believe that those years, even the Rawlings area, we need to have to go to the US and bring his classmates from the World Bank to assist and help. I believe that everybody's quiet. We cannot be quiet and watch our foreign minister who is fighting his own battles, as nobody's helping him. You see, look, if you look at the last few days, I was here the last time, you see, the president had declared this crisis. Even this morning when I woke up, the first thing I heard with Pastor Otabil, he's declared crisis in his own biblical words. The minister said, Jeremiah,
Nehemiah.
Nehemiah. Whatever we are all talking about, those are 5,000 years ago. Sweetheart, 5,000 and more years ago. What do we do? You say, look, we can resolve this problem. Let us know what the problem is. So let us start finding a solution from today. Government has only 2 more years to go. 2 more years to go.
And for you, that is why it matters whether this is the finance minister or the finance ministry or the IMF's initiative.
Very, very important.
But do we have a choice? At this point, we are told that our hands are tied. We are tied. We are going to the IMF. The IMF insists that we need a debt restructuring program, and until we do that, we won't get the support we so badly need.
I disagree. See, when you look at the Attorney General's, also, the Attorney General also disagree. It's a legal matter. It's a serious, serious legal matter that is coming on our heads. But the Attorney General of the state disagrees. If you hear the comment.
Disagrees with what exactly?
The issues about the bondholder, it's a legal issue. You're holding your pension, and then somebody said, carry it out. There will be a lot of legal issues that are coming forward. See, so I'd like to be very practical about the matter and see what exactly is the issue. You see, look, when you look at...
So are you saying, as of now, the issues are still not very clear? It's a bit murky?
It's very, very murky. Very, very, very murky.
So are you in agreement with the Chamber of Trustees then when they come out and say, as of now, with what they know, they are not going to comply with this?
When you listen to all of them, they claim they are not consulted. They are the one holding your bonds, your pension, not the Minister of Finance.
Right.
They are the one holding it. I say, we have not been consulted. We don't know anything about it. We don't know what is going on. We'll not allow it.
Okay.
We'll fight to the end of our battles.
Okay.
Right.
Let me bring in Professor Gachi here. So, Prof, do you agree when Dr. Klugerson suggests that we may be nearing bankruptcy?
A major disruption of the economy, deeper than what we are experiencing now. But we shouldn't be blackmailed with this difficulty that we may get in if we don't go through the debt restructuring.
Sorry, Prof. Sorry to interject, Prof. I didn't get your answer to my question, your initial response. I was asking if you agree that we are nearing bankruptcy.
I say I do agree
that
there is, if this thing doesn't go through, we may enter into a major disruption of the economy.
I'll need you to... I'll need you to also clarify this for me. The minister said that individual bondholders will not be affected, including pensions. For many people, some of these conversations are quite hard to grasp. So just help us understand how the issue that my colleague Benjamin raised comes in here with the trustees having concerns about the likely impact on pensions, even though the minister has said that pensions will not be affected.
Well, I think we explained that point already, that many people do not buy into the bonds directly.
Right.
They pass through institutions.
Right.
So if these institutions are talking, they are talking for the individuals who pass through them.
Right.
So if you say individuals will not be affected, that is not that's not clear. So the way we understand things in the financial market is that people pass through institutions and buy their bonds, and that is it. And if you cut the investment of institutions, you are indirectly affecting those who pass through them to do the investment. That is how it is.
Right. Finally, for me, for now, Prof, we've mentioned, even in this conversation, that yes, there will be some monies lost, whether we like it or not. How does this translate at the micro level?
Oh, well, the banking sector may be disrupted. Right. I'm sure no money may be paid to shareholders very soon. I believe capital erosion will take place.
Okay.
The effect on the banks will be liquidity in nature and eat into capital.
Right.
And that will affect the ability of the banks to lend money to the private sector to engage in productive activities. The same thing will apply to other institutions. So that is a major development that will take place, especially in 2023 going.
Thank you, Prof.
Let me bring in Professor Mensah. So per the permutations of government, this should reduce the public debt, which stood at some 467.3 billion Ghana cedis, or the equivalent of $48.8 billion. But when you look at the other ends of it, the banking sector looking at over 80 billion Ghana cedis invested in these bonds. You look at the insurance entities with over 20 billion Ghana cedis involved. You are looking at over 100 billion Ghana cedis that could be affected by these this debt exchange program. What could be the real implications of this on pensions, on, like has been mentioned, very few individuals going for these investments? Though T-bills are not affected, what could be the real impact of this moving forward, looking at the time involved?
Okay, so if you look at the MPRA's pensions, contributions, investment allocations, you come to understand that majority of those pension contributions are restricted to be invested in government bonds. Okay, so having this situation on the ground, depending on the pension obligations that these pension institutions have on hand, the pension balance sheet is going to be distorted, no doubt about that. And once it gets distorted, meeting certain levels of obligations will be problematic. And so we foresee getting to a point where pensions will be struggling in terms of, paying, pension funds, contributions. And so at the end of the day, the ordinary person will feel it going forward. And obviously, the yields on pension investment is going to go down. And once yields on pension investment goes down, it will affect, the ability of the pension institutions to meet, their pension obligations. So the ordinary man will feel it. And looking at, 2037, that is when myself and probably Professor John Gachi will be going on pension. And it's quite shaky.
So this will hit you all the way till pension time, which is pretty telling. Yes. But then, all right, wrap at that point. Okay, so let me come in here. There's a question that was addressed by, the finance ministry in respect of rights that could change, or if someone decided to change his or her mind after, signing up for this bond exchange, what could happen? And the answer was that all offers made eligible holders were irrevocable. Once you enter it by the 23rd of December, you move on with it. But my question is, looking at all the dynamics, apart from with T-bills, can bondholders at this point, what are their real options? Should they look at selling off, retaining, transferring? This is a business situation, and people will make the most rational choice. Right. If you were advising people, what would you tell them to do around this time, looking at the time involved and the diminishing returns?
Yeah, well, where we find ourselves now, I can tell you that anybody who is ready to sell his bonds, you will not get market for it. Who is going to buy bonds that is likely to face restructuring? So it's time that options are very, very minimal. For individual investors, I can say that they may have an option, possibly going for your money now. You receive some haircut, but then you may want to put the money in an investment that you have control over. Okay? An investment that you can manage on your own. So for individual investors, no problem. They can go for their money and possibly, receive some haircut and then reinvest into other things that they can control. But then for institutional investors whose main investment destinations are on government bills and, instruments, it will be difficult to take any decision to back out now. Their hands are tied. They have no choice than to keep the money with the government until things get better.
Just a quick follow-up. T-bills are excluded for now. We've also seen that, vacillation. Oh, we'll not do this. We've done it. Oh, we'll not do this. We've done it. I'm just wondering, because I'm sure holders of T-bills would also think, okay, we are safe for now. But depending on how things go, we saw how the e-levy, the projections were, and then when things didn't work out, now we've seen how things have turned out. So with these bonds and the 23rd of December, would there be a window? Is it even possible that those with T-bills, if things don't go right per government, could also be affected? I just want a very broad conversation on that. What is your take?
Well, for T-bills, that would be the last thing to touch, because the economic repercussions coming on T-bills will be very, very massive. Now, government is looking at, possibly having that medium-term obligations extended to long-term. But for short-term, which is within 1 year period, government needs that kind of investment if I should say, they need them. Without, T-bills, government may not be able to meet some short-term obligations. So they understand the system. And for T-bills, it has been dubbed, risk-free. And being risk-free, and more so coming from, a government with that kind of sovereign power or sovereign credibility, it will be the last thing to touch. And so T-bills, I can be sure that for the next few years and few months, that is the sure investment you can have. But then beyond that, it's quite shaky. And that is why normally, if you are going to invest, relatively, the T-bill rate is quite a bit low compared to the bonds and then the other government long-term instrument that you enjoy. So because of the risky nature of those bonds. So effectively, T-bill, it's something that will not be touched on. Let me be sure of that.
Now, let me come into the studio now. Dr. Klugerson, you've expressed fear about the success of this debt exchange program. We've been told what the consequences are if it's not successful and what the options could be. But for you, what will be the way to go from here? There are complaints about no negotiation. There are concerns about trust, like Benjamin has just raised in previous instances where we've had government say, we won't do this, and then it goes ahead to do it. So what's the way forward? How do we get out of the woods? Because clearly we need a solution.
You see, we've been working with government, even though we are not government officials. The world tells you where your economy must be. Look, Ghana, we need to be very, very serious and leave the politics. We cannot have gold if we don't own gold. You see, it's all about equity. I've been saying this for many years. All these issues, the kind of Ofori-Atta knows that you need to have equity. It's an investment banker. Let's get legislation to stop all this going on in Parliament. And let's be very serious for our country, for our economy, so that you, the next generation, can benefit. All we need is to be able to come up with legislation as to where our equity level is. I was at the conference when the Vice President brought the gold issue. We only have 8 tons of gold. All this swap, apart from the debt, we only have 8 tons of gold. Ghana is a gold country. We are only holding 8 tons of gold.
Do you mean the central bank or?
Yes, the Vice President declared that Ghana has only 8 tons of gold.
Right.
You see, when you go to a macro level and you put all the issues as a business person, as somebody who has been involved, they are serious issues. Let's engage. What are the issues? See, we have 275 brilliant people in Parliament. You understand? Let them get involved and stop the politics. Let us solve the problem.
So one of our guests made reference to the fact that, look, this is going to take 15 years. Most likely, this government will not be in power. And there have been concerns. I remember Benjamin had a conversation with the National Development Planning Commission. There are even concerns about transitioning. If there needs to be a change in government, how are we going to carry this program through, seeing that it's a long-term one? How do we ensure that at least for this particular one, they get it right?
President Ben is sworn in, I'm using your name, excuse me, as a president, on January 7th, he holds his sword, and then whatever, hereby, so. And his speech, then he said, hereby cancel all these issues with immediate effect. What do we do?
Yeah, and that's the question I'm asking. So how do we ensure that?
You cannot ensure. This is why when you have a mandate, as a person you are appointed, you do issue within your mandate. You don't do things over and above, cross your mandate, because you don't have those powers.
And that is general courtesy to other governments, because even when, assuming you transition from one MPP administration to another MPP administration, even then there are concerns about leaving certain legacies, because the next person who takes over may not even
go for it.
But Doc, here's the other angle. We know that this is a long-term measure. We've been told that that's the way to go. We can't do this in the shortest possible time. We need to build momentum again when it comes to solving the economy. Does this then bring in the conversation also about the tenure of office? Because you're looking at 4 years, 2 years already gone. We need this. We've been told, look, the IMF, Professor Lord Menster, we've had him here. He and other analysts say we should have done this earlier. Well, we find ourselves where we are. We need to do it anyway. So do we need to begin to have conversations also about that due to situations like this?
I chaired a program at the University of Ghana last week, and I hear a lot of things Professor Lord mentioned, so many of these issues presented. This is a question I've asked. Is it the case that the professors are not teaching the students who became ministers, or they are not listening to the professors?
I hear Professor Mensah and co chuckling, chuckling in the background.
He knows my views. You see, I hear Professor Gachi, I hear all these issues every day in my life. What is the issue? What is the default? Most of the ministers, most of the whoever taking decision, they went to Legon, went to the University of Ghana. What are the issues? I told Professor Elsie Kaufman the other day, can you please come and do your advocacy instead of national quiz? Look, you see, there are so many countries that are going through so many issues and they are solving their problem. Today, all the youth want to go into technology, and that's where the transformation is coming from many countries. So let's find a way to engage. The vice president is trying very hard, and this and that. See, our last resort now is gold. Now, if the gold failed, the debt swap fails, then what do we do?
Right.
You see, sweetheart, look, if we do not start talking about these kind of questions that we did many years. Look, I chaired the HIPIC program many years ago with Wolf Wilson. We were told that if you go here to bankruptcy, the Japanese embassy and everybody went. It took 7 years. This is maybe more than 15 years, sweetheart. It may go up to 30 years. You see, and there are a lot of issues, there are a lot of brains. All we are fighting for is only $3 billion, from which somebody can write a check. You understand? Can Japan say I lost $12 million? Maybe let's get back to we, the business community, who can afford, who can do this, who can engage. Look, I made another example today about the UK. President Thatcher had to issue many years ago. A businessman billed the British government to Al-Fayed. He went to the Sultan of Suriname and brought money and other issues. There are a lot of things we can do from even where I sit.
Right, beyond going to the IMF. So for you, you don't necessarily agree that our hands are tied.
I don't agree. Look, if you get $3 billion today, you cannot spend $3 million by 2025. You will not. You may even get the money during the last quarter of next year. You don't even know. So what do we do in the interim? So I do not agree on all those things for now, because we are stressed, we have problems. Let's engage.
Okay. Speaking of that engagement, let me, and I know, Charles, we'll come to you shortly, looking at the business dynamics, you as chairman of the Volta Development Forum and you with the Ashanti Business Owners Association. But I'd like to very quickly find out from both Professor Mensah and Professor Gachi. We've been told that debt relief will be required, let's just go outside a bit, from all external creditors, including Eurobond holders, and that the external debt exchange parameters will be presented in due course. So we don't know, we don't have the fine print yet. How do you feel this could go with our external creditors on this? They have their options. We are in a problematic situation. We are basically going to beg them to be merciful unto us. What are the dynamics we are looking at? I'll start with you, Professor Gachi.
Okay. Well, what I know is that we have made some attempt to engage our foreign investors, and that attempt has failed. That would have been the easiest approach to undertake, but that approach has failed, and I believe they have constituted a number of teams to engage them again. So perhaps they are waiting for the result of that engagement. Having said that, I think the investors have learned lessons from the HIPIC initiative, where there were a number of debt forgiveness, etc.
Yeah.
They have not seen any change in the African leadership. They have not seen commitment to using or to creating value for debt, using debt for what it's meant for, to lift the country out of the woes. So it is difficult for them. Just around 2020, they provided a lot of money to support us fight COVID-19. And that we are not even able to provide an audit report to indicate how we have spent the monies. So all this very clear on the minds of the external creditors. it becomes very difficult for them to agree to deal with this. So,
in other words, the incentivization is not there. We've not shown ourselves responsible, and we've made it very difficult for them to even give us debt relief or forgiveness.
Yes. Even if you divide the external creditors into commercial creditors and bilateral and multilateral, take the bilateral, for example. IMF, for example, has given about $1 billion in HIPIC time, in COVID-19 time. And then if you convert that money in today's term, that is a huge sum of money, and that we are not accountable to that. And IMF, World Bank, and etc., they are the one who can easily undertake debt restructuring because they are discretionary in nature, etc. But I do not think that we have placed any good record before them in terms of managing funds. And that is why we need to feel this pinch by focusing on domestic debt restructuring. So, as I said, the next batch of the team that have been sent out, will wait to see whether they are able to convince, especially the commercial creditors, to lose their money the way the minister was talking about.
And that's interesting the way you put it. For you, Professor Mensah, what is your take on that same point? Interesting when Professor Gachi says that we've not given them the right incentives. We are not even giving the right reports when it comes to sums of money that have been given us for free. So if you can't even account properly for that, what will be the incentive to forgive your debt? Your take?
I think looking at the component of creditors we have in the current, debt, it's not compared to what we had in the 90s. What we had in the 90s, where we can easily go for HIPIC in the early 2000, was more or less a bilateral debt. Was more or less debt that the creditor was, maybe an institution, which could be an IMF. So when it comes to creditor concentration, negotiations becomes, easier. But then looking at the current, debt that we have, you could see that the component of our creditors are quite, open. You're looking at someone sitting somewhere in Switzerland contributing his pensions, and his pension manager has decided to invest on the Eurobond market, which Ghana, went there to borrow and all those. Somewhere taking up somebody's insurance premium and intend to invest on the Eurobond market, and Ghana going to borrow from. So you have an open-ended kind of, creditors, which negotiations will be tough. But then the creditors themselves know, and they themselves, providing the funds to Ghana, they knew very well that a developing country like Ghana, the likelihood of default is very, very high. They know the risk, and the risk went with the possible returns that they've enjoyed over the years. I have a friend in Switzerland who is a gatekeeper on African, Euro bonds. And he tells me that they enjoy African bonds because when they, sell out the bonds, within the first few years, the interest that they enjoy, they have to, if it's Europe, they have to invest for so many years before they can enjoy, this bond. So those are possible coupons. But then they knew very well that the risk is high. So at a point where your creditor is likely to default, if they don't accept anything negotiable, and it turns out that the country defaults, they may not get anything. Probably some of the assets we have may be confiscated, and then they run it to pay back their debt. And remember, this is a commercial debt. You will not be surprised. You'll be sitting here, and then, a big asset like our airport, or a big asset like our Temaport, will be run by a particular entity from Europe, trying to repay, themselves before they release it to Ghana. So the options are there, but I believe that on the table there will be a converging point where both parties, the creditor, which is the Eurobond and all those, investors out there. And then Ghana will come to a point where they will, it's quite stressful when a country is going through, a restructuring. Because it's costly to go through restructuring itself. Because now you have to incur a cost of hiring an intermediary to, negotiate on your behalf and all those. So effectively, we pray that will come to a point. But I will not, say that those external creditors will not buy in, on our, kind of offer. But like I said, the offer we have on the table now is owned by IMF, the same way they would design a similar offer for our external creditors. And then, and the reason why we started this, domestic debt, restructuring here is that, we may have to start here to give the signal out there that, the economy is going through difficult times. And therefore, we are ready to, restructure our domestic debt. Right. So as what is happening now, the external creditor has the information that we are, going through, debt exchange in our environment. And as a result of that, they will prepare the grounds. And then also the possible exposure in case we should default as far as the external creditor's portfolio is concerned. It's very, very minimal. They knew the risk here. They don't invest all their funds on the Euro bond market for us to go and tap into it. I can tell you that if you look at the portfolios that the external pension institutions are managing and then floating some on the Euro bond market for us to go and tap into it, it's not up to 5% of the portfolio that they are managing. I know Africa gets very, very small portion of the Euro bond that are issued on the market. So effectively, there is hope. Let me put it that way. They are prepared, and the kind of package that IMF designed for our finance minister for the domestic market, I believe that once we start getting policy credibility from IMF as a result of staff level agreement and all those, the external financiers or the external creditors are likely to buy into some of possible negotiations that we'll put on the table. So starting from the domestic market is ideal. In a way, once we get a staff level agreement and going into the next year, a possible, IMF deal on site will give the external investor some confidence. Right. And as a result of that, whatever we put on the table in the form of negotiations, they may buy into it. But they know very well that per the dynamics, once we are with the IMF, we stay financially, disciplined. Right. And therefore, their funds, repayment will be assured.
So we are also told that there will be some support for banks and financial institutions. Obviously, there could be or there will be solvency issues. And the finance minister said the governor of the Bank of Ghana will give further details later. Let me come to you, Charles Appiah. You were with the association, Ashanti Business Owners Association. I remember the last time we spoke about the economy and how it was impacting businesses. You mentioned that some of your members are closing down their businesses. How are you offering support to one another? Has it even come up on how to deal with the situation and how to ensure that you all stay afloat during these times?
We still have an engagement. What we are doing now, a strategy, we say we are doing environmental scanning to appreciate where our strengths are, where we can have our leverages, and see what support we can extend to ourselves. We are already in a very disrupted environment because even supplier credits have been cancelled because of the challenges within economy. So what is left to ourselves is how probably we can intertrade among ourselves as a business community. But there is a challenge with our VAT system where even when you are intertrading among yourself, you are supposed to pass on a certain VAT to someone who is extending support to you. Someone business is collapsing. I want to supply some goods so that you can sell to get something to take care of yourself. By the tenets of the VAT, I'm supposed to pass on a certain a VAT to such a person, and it makes price very uncompetitive. The person I'm supposed to support, price becomes higher than me. No one will not buy from that person. And the person, where is the support? He obviously will have to collapse again. So we're trying to engage government to appreciate the challenges that when you are hard hit, the very people you fall on is the business people within your country. So is it critical now that you look at how best you can support them now? Give them the certain buffer, the certain support, so that they can stand such turbulence when they occur, and we will give you the support. But when you listen to our conversation across board, government interest has always been the foreign investor. What has been the local investor? The doctor in your studio was saying that the local business have the capacity to support government to raise this 3 billion we are talking about. But what have been government investment within the business community so that we can be strong enough to support him in times of this? For us to sit and we speak, government have not shown that kind of support to us. We have limited resources that we can extend to our members, and that is to pass on some goods for them to sell. But it still be counterproductive because of our vast system. So we're telling government earlier on that take off VAT from the FMCGs. As this time that price of items are going high, when people cannot buy simple food to eat, it is time to alleviate their plight by taking VAT from stable foods, so we can have some space to eat and be well. When we are fed well, government will reduce its expenditure in the health sector. A healthy people is a healthy country. So we can achieve at least the SDG goals, or where people will reduce hunger. Yeah. Now, disposable income will be affected because of what we call inflation taxation. Inflation is about 40.40%. And by no fault of any business person or any consumer, prices of items are high. So you don't aggravate our problem by increasing a certain policy of VAT. This is the time for government to see what support can I give to the business community. Right. What support can I give to ordinary Ghanaian, so we can probably also rally behind him and say our government or our country is going through these challenges, but government in even this, irrespective of these challenges, also supporting us. What else can we do for government? Right, Charles. One other thing I've always complained about is briefly, please, how we set our budget and revenue targets. You see, has government done the analysis to appreciate what challenges businesses are going through at this time? Is it always about government raising revenue at the expense of collapsing businesses? This conversation of the bottom up must be introduced, where business will tell government, this is where our interests are. If you already support us, this is how much we can raise for you in terms of revenue. So that you don't always sit and just introduce something that does not meet the challenges and solve this problem we are facing.
Okay, Charles, for the sake of time, we would have to, but thank you very much for those thoughts that you've espoused. Bernice?
Right, so I mean, we have the former AGI president here with us, who's also president of the Water Development Forum. I was just about to ask him, in practical terms, how can businesses survive the current economic situation, and how can they offer support to themselves?
You see, it's very difficult for now, but history has shown us that Ghanaian business, from one way or the other, supports government, and we always find a way to get out of this mess. But there must be honesty from government to the business community. You see, Ghanaian business community... Has
that been shown so far, honesty?
No, it has not been. You see, if it's been, we'll not get here. You see, Spain will not have been here. You see, when you look at the economy is not that bad. When you go around, we see Malcolm, bigger shops, you know, many activities are going on in the country, physically, you know, and people are buying, the buying power is going on. So what exactly is the deficit? You see, we need to have clearly understand the deficit and seek help for those deficits. You see, look, I mean, yes, you know, when you look at, you see, one of the problem in this country is most those who talk about the mindset as what they think that I can do it, no, we can do it. You understand? You see, so therefore, the business community, I must tell you, they are suffering, some of them going to close down factories. You see, when you talk about T-bills are not going to be touched, I beg to differ. You know why? Most of those T-bills are leveraged for loans with the banks. You know, most of the T-bills are also leveraged, you know, by the business community for loans for the banks. So if they default on the loans of the bank, then what happens? So there are a lot of issues that are there, but I don't think that it's not that bad if we believe that we can deal with it, we can solve it. But to say that Ghana, the whole of this debt is Jamaica and Greece, that also worries me. So you mean all the 54 African countries, you know, I'm not going through that. So there's no sampling to do.
No. I mean, those were just examples he cited, and we understood it to mean he was just trying to create the differences. For Jamaica, it was voluntary. For Greece, it was compulsory through legislation, and said he didn't want us to go through the Greece way. Well, for now, we are told it's voluntary. But yeah, Professor Gachi...
Of course, there are differences in understanding of what voluntary would mean. But maybe to cap off the conversation, I just want to throw this to all of you, because I saw this interesting comment. Otukwame Kingsley sent this in, and he said, in all honesty, shouldn't someone be punished or made to face the laws of the land for leading the entire country into this economic mess? The commentary around our economy seems very scarce, and we are just doing or playing the blame game, explanations and looking on with English. The reality is biting very hard. Why always make the innocent suffer in this country? So in terms of who should carry the blame or where we should place the buck, what is your take? I'll come back into the studio, but let's have quickly the three of you on Zoom. Professor Gachi, let's do some 40 seconds, same for Professor Mensah and same for Charles. I'll start with you, Prof. Gachi.
Well, I think in all sincerity, without any malice, I believe people would have been open to this discussion more if another person were to be telling them.
How do you mean?
What I mean is that, you know, the finance minister was the one who was borrowing. He has his borrowing plan over the past 6 years, and it has gotten to this point. And without sincerity, without being malicious, I believe things would have been different if another person is in the seat telling people about debt restructuring.
So you're still going back to calls for the finance minister to leave office?
The issue is about trust. The issue is about goodwill. So I don't know if the finance minister has the goodwill, whether he has the trust of the country, or he has the trust over the market. Those are critical issues. So that is the way I see things.
But Prof, for our viewer, he thinks somebody should be punished, somebody should be made to face the law, someone should be responsible for where we are.
That should be left with others to discuss.
Sure.
I am from Professor Mensah. Professor Mensah, maybe you are one of the others. What's your take in 40 seconds?
Well, probably I may be one of the others, but then, unfortunately, our constitution does not, give us any room for a finance minister or an economic manager who come to mismanage the economy. The best or the highest we can go is to replace, the finance minister, which an attempt has been made. I know very well that at this time, those attempts will not end up anywhere. So effectively, under normal circumstance, we should have changed management. But then it's a constitution we have adopted, and the constitution does not make room for anybody to be jailed or anybody to be. It talks about causing financial loss.
Exactly. I was coming to that. Yeah.
Causing financial loss to the state. The interpretation over the years, at the law court, my understanding is that, when you are giving money and then, the money get lost or the money get misplaced, that is when, we interpret it as causing financial loss to the state. But then the indirect ones, through mismanagement and all those, the interpretations, the law court finds it difficult. That is why most of the time you see people going to the court and they are released. So effectively, it's a structure or it's a system we have adapted. And effectively, we cannot do much about it until maybe at the end of the 4-year cycle that we can use our tongue to change.
Right.
Okay.
Charles, same question to you quickly. There's a viewer who thinks that someone should be held responsible for this. What's your take?
If the two professors could not give a verdict, who am I to give a verdict? But my basic principle is leadership is about responsibility and accountability. Someone must take responsibility to some of the actions or inactions that have plunged us into this stress. And the question of accountability is, those borrowings, were they right? Were they legit? Did they help us or not? If it did not, those who have benefited from such borrowing, are they ready to refund such benefit back to the state to support us at this critical moment? At this point, I'll leave it as it is now.
I'll give you the final word, Dr. Klugerson.
Well, I think it's a very simple phenomenon. Two options. My friend, the Minister of Finance, go very biblical. If the biblical way, then we look at the Moses story, where he couldn't reach Canaan. Then the last one is the Black Stars.
And handed over to Joshua.
The Joshua.
Okay.
So then now the Black Stars coach.
So should the finance minister be handing over to Joshua right now?
I didn't say so. What I'm saying is, he's my brother. He's very biblical, so I'm just referring to the Bible.
So you're speaking in parables.
In parables, and also the Black Stars coach.
Right. Otto-Addo.
Otto-Addo, voluntarily. Maybe, you see, these businesses are not that issue. See, Ken, let me be honest, he did very well, but he's tired.
Ken did very well, but he's tired.
You see, and when you're doing management, you're on executive level managing all these issues, it's not an easy issue. So I would think if I have to advise him as a brother, exit. So that President Kufuor also mentioned those issues.
Yes, he mentioned.
It has nothing to do with him. Let's see what can happen.
So we shouldn't personalize it.
No, I don't think so. Because look, he did well. If I want to give you history coming to this country, but it gets somewhere where when the signals are there.
Now, now you're saying coming into this country, are you saying he did well as a businessman before venturing into politics, or he's done well since he became finance minister?
One of the issues in Ghana which people fail to realize is our names. Kwesi Chum has a name, as a brand. Ofori-Atta has a brand. Kwesi Num has a brand. This was a brand. You see, these brands are the one that does many of the issues that goes. Kufuor has a brand. Kufuor has a brand. John Mahama has a brand. So you see, but when the brands start getting damaged, there's a credibility issue.
Okay.
Right.
You understand? You see, you are in the media. When the brands getting damaged, you can go and look at the face before they go. Adogo made a statement about Maguire something.
Right. And someone retorted
from the UK. You see, we are in that world, so we must all maintain our credibility for our children. Otherwise, the future damage for credibility and brands will be difficult.
Just to wrap the entire conversation off, if since we're talking about Moses and Joshua and all of that, if someone else had to take over from the finance minister now, from the majority end, and these people, who off the top of your head would come to mind?
Kendapa.
Albert Kandapa.
Yes.
The national security minister.
Yes. He's a sharp brain into finance and accountants. Has the demeanor to control people, to manage people, So I think maturity-wise, we need somebody mature like him. That's my recommendation.
Interesting.
That is.
Well, this has been a very interesting conversation.
I honestly didn't see that coming.
Honestly, I also didn't see that coming. But this is Dr. Klugerson we are talking about. He's worked a lot with some of these people and has a wide range of experience in various sectors. So thank you so much to our guests via Zoom, Professor Gachi, Professor Lord Mensah, Mr. Charles Appiah, and to you, Dr. Klugerson. Thank you for helping us digest this issue of our debt exchange program, what the consequences are, how it will affect you as what we like to term as an ordinary Ghanaian or as an ordinary citizen, and what we must brace ourselves for. Well, water is life. It regulates your body temperature and keeps you alive and kicking. Awake is premium purified water treated through a strict purification process to ensure that every bottle on the market refreshes you better. We have the perfect sizes for all occasions. 330 ml and 500 ml bottles to fit your pockets and bags, 750 ml for the heavy drinkers, and 1.5 liters for those who always want more. We've introduced our special 19-liter jar for offices and homes. Now you just need to stay awake with Awake Purified Drinking Water wherever you go. Come on, grab a bottle of Awake Water and get quality hydration. Awake Purified Drinking Water, one for life. Remember, for every bottle you purchase, an amount is donated to the National Cardiothoracic Center. It's produced by Casa Preco for bulk purchase. Please call 026-235-1251. This advert is FDA approved, and we now need to take a breather and go get some water. When we come back, I will be having an interesting conversation, Benjamin, on farming and looking into climate change issues and all that. So do stay with us. We'll be back with more.